market today, what you need to know: UK, USA, Oz, CAN, white tick mark, scene 1, intro and hook. Today's stock market is making waves across the UK, US, Australia, and Canada. From tech giants to new players, here's what you need to know right now. Montage of financial cities: London, New York, Sydney, Toronto plus stock charts moving. White tick mark, scene 2, market overview, global. Let's start with a quick snapshot. The FTSE 100 in the UK opened slightly lower today, while Wall Street bounced back after last week's dip. The ASX in Australia is seeing a tech surge, and the TSX in Canada remains stable with energy stocks leading. Live charts of FTSE 100, S&P 500, ASX 200, and TSX with upward/downward movement indicators. White tick mark, scene 3, top tech stocks today. Apple stock is showing strength after their new product launch. Nvidia is up 3% following AI chip news. Tesla is slightly down amid delivery concerns, while Microsoft continues to climb thanks to strong cloud growth. Logos of Apple, Nvidia, Tesla, Microsoft with quick data stat overlays plus stock arrows up/down. White tick mark, scene 4, breaking news: Meta, Google, Sophie. Alphabet, the parent company of Google, is expected to report earnings this week. Meta stock is trending as analysts revise price targets. Meanwhile, Sophie is gaining popularity among retail investors. News headline transitions, financial analyst visuals, trending tags or Reddit/stock community clips. White tick mark, scene 5, market trends and expert tips. Experts say keep your eyes on AI-driven stocks, clean energy, and dividend-paying companies. These are the themes that could define Q2 of 2025. Diversification remains key to reducing risk. AI chip visuals, solar panels, wind turbines, dividend stock charts, checklists for diversify. White tick mark, scene 6, how to invest smart in 2025. If you're new to investing, use platforms like eToro, Fidelity, or ComSec depending on your location. Start with blue chip stocks or ETFs, and always track your performance weekly. Screenshots of eToro, Fidelity, ComSec Plus app UI mockups, list of beginner-friendly tips. White tick mark, scene 7, outro and CTA. Thanks for watching today's market update. Like and subscribe for more stock insights across the UK, USA, Australia, and Canada. Comment below with your favorite stock today. Host smiling, stock market visuals in the background, subscribe plus bell icon animation. Are you confused by today's stock market shifts? This tutorial will clarify current market dynamics. By the end, you will understand key trends across major markets. First, let's explore the UK market. The FTSE 100 opened lower today. Uncertainty around interest rates is affecting investor sentiment. Watch for changes in inflation data here. Next, we turn to Wall Street. Recently, it saw a slight rebound. The S&P 500 and Nasdaq are recovering. Strong earnings reports are driving this positive momentum. Now, let's look at Australia. The ASX 200 surged due to tech and mining gains. Rising commodity prices are boosting the economy there. Moving on to Canada. The TSX remains stable amid favorable energy and banking stocks. Oil prices are significant for today's market outlook. Finally, let's analyze some notable stocks. Apple's stock price rose after a new device launch. Investors are excited about their strong margins. Nvidia's stock jumped due to news of new partnerships. The AI sector's growth potential boosts market confidence. In summary, today's market movements reflect economic patterns. The UK faces interest rate uncertainties. Wall Street shows recovery through strong earnings. Australia benefits from rising commodities, and Canada remains stable. Apply these insights to your investment strategy today. Stay informed and adapt to changing market conditions. Thank you for watching. Happy investing. What if a pause in interest rates could change everything? The US Federal Reserve is hinting at this pause. This potential decision could affect the entire investment landscape. Let's unpack this to see how it could impact various markets. The Federal Reserve's decision on interest rates is crucial. A pause offers a temporary boost to equity markets. This hinges on upcoming inflation and labor data. These economic indicators guide the Fed's next moves. In the UK, the situation is different. Investor sentiment is uneasy. Households are grappling with rising costs and borrowing rates. Still, the defensive stocks, especially in utilities and healthcare, remain resilient. These sectors offer stability during market turmoil. Now shifting to Australia, investors are making choices driven by tech and resource sectors. Companies focused on global demand for rare earths and lithium are gaining attention. As we move into Q2, this trend shows signs of continued support. Meanwhile, Canadian markets thrive. Their stable banking systems play a significant role. Strong energy exports further boost the TSX's performance. This resilience emphasizes the necessity of traditional sectors in investment strategies. Let's not forget dividends. Dividend-paying stocks are captivating conservative investors. Companies like Johnson & Johnson, BHP, and RBC deliver consistent returns during uncertainty. They ensure lower volatility even in choppy waters. So, what's the takeaway? Diversification is crucial. Investors should spread their money wisely across sectors and geographies. Relying too much on one market can lead to localized shocks. In summary, the Fed's pause in rate hikes could revitalize equity markets. While the UK faces challenges, defensive stocks remain solid. Australian investors are keen on tech and resources. Canadian markets show strength thanks to stable sectors. And dividend-paying stocks continue to attract investors wanting steady returns. To navigate this landscape, consider diversifying your investments. Stay informed and adjust your portfolio as markets shift. For more insights like this, subscribe and stay updated. Are you ready to dive into investing? If so, keep watching. Investing can seem daunting, but it doesn't have to be. Exchange-traded funds, or ETFs, are a fantastic way to start. ETFs provide access to diverse stocks with low management fees. They are especially popular among new investors in the UK, USA, Australia, and Canada. Now, let's explore how to maximize your investing journey step by step. First, choose a reliable trading platform. Platforms like eToro, Fidelity, Robinhood, and CommSec offer great tools. Each platform provides educational content and accessible trading options. Next, develop an investment strategy that suits your goals. Financial experts advise reviewing your strategy quarterly. Regularly rebalancing your portfolio keeps your investments aligned. Set realistic long-term goals to maintain focus. Avoid emotional trading, it often results in losses. Let's consider an example. Imagine you invested in an ETF that tracks major tech stocks. If tech companies rise, your investment grows. However, if emotions lead you to sell too early, you miss profits. Always stay informed about key market drivers. Monitor earnings seasons and central bank meetings closely. These factors affect market volatility and long-term performance. In summary, ETFs are a smart investment choice. With strategy, research, and a level head, you can succeed. Don't let fear hold you back from investing. Start your journey today and explore your options.